Peace. Give me a couple seconds. Peace. Give me a couple minutes. All right, we're gonna get started. All right, everybody's here. Yeah, you guys are being recorded.
Yes.
I'm gonna lock the room.
My name's Brian, and I just wrote a brand new 56-page book called How to Become Financially Independent on Airbnb.
Okay, it says of the net gift 26 USC 2502C, which tells you that the donor is liable for the tax. Hereinafter, the Internal Revenue Code establishes the gift tax liability is the responsibility of the donor, thus the resulting complications. As a result of payment of the gift tax by the donee, the gift value cannot generally equate to the fair market value of the asset at gift. Revenue Ruling 75-72, 1975-1 CB 310 provides that for the gift tax valuation purposes, the gift value is equal to the fair market value plus minus the gift tax paid. Well, the gift value is the fair market value, which is the value of your estate. What you did is you donated a security, which has a market value. It has a market value, otherwise either at original issue discount. This thing has a market value at security. 30 years times the amount of the payment.
So if you
As a
take,
result,
if you take a payment schedule and they say you gotta pay $1,232.79 per month in a mortgage payment, you would take that and multiply it by 360 months, which that's only 3 years times 10, right?
no, you multiply it by 30 years.
Right. Yeah. And then that gives you the fair market value of the asset
Yeah, at maturity.
at maturity, which is the fair market value of the note security at maturity.
You're not paying see, you think that you're paying, your donation is on the security. The value of the security, not on the property, the real estate. Remember that note is the security, not a note.
So people, our attendees need to understand, you're not paying off the property. You are paying the tax on the security, which was never our responsibility. It always was the mortgage company's responsibility.
And I'm going to show you a case. If we read this, let me finish reading this. This income is recognized where the gift taxes payable exceed the donor's basis in the gifted property. Diedrich versus the Commissioner, 457 U.S. 191. Noting consulting determined by the type of transaction, assuming there was no Diedrich type of gain to the donor, the donor's basis is the sum of the donor's basis plus any gift tax paid at time of gift related to appreciation of the asset, not to exceed the fair market value at the time of the gift. Treasury Regulation 1.1015-5A. If a Diedrich part sale, part gift transaction controls Treasury Regulation 1.105-4 provides the transferee's basis is the sum of the greater of the transferee's payment or the.
Read that one Treasury regulation thing, because you garbled.
Is Treasury Regulation Section 1.1015-4.
Okay.
Everybody get that?
No.
Everybody else get that?
Yeah.
Tax on the security, which was never our responsibility. It always was the mortgage company's responsibility.
And I'm going to show you a case. If you read this, let me finish reading this. This income is recognized where the gift taxes payable exceed the donor's basis in the gifted property. Diedrich versus the Commissioner, 457 U.S. 191. The donor's resulting basis is determined by the type of transaction. Assuming there was no Diedrich type of gain to the donor, the donor's basis is the sum of the donor's basis plus any gift tax paid at time of gift related to appreciation of the asset, not to exceed the fair market value at the time of the gift. Treasury Regulation 1.1015-5A. If a Diedrich part sale, part gift transaction controls Treasury Regulation 1.105-4 provides the transferee's basis is the sum of the greater of the transferee's payment or the.
Read that one treasury regulation thing, cause you garbled.
Is Treasury Regulation Section 1.1015-4
Okay,
provides that the transferee's basis is the sum of the greater of the transferee's payment.
now put that in English.
Well, the amount that you transferred, which is the value of the security, the amount that you transferred to them at closing is the amount of the tax they owe.
Okay, so the
What is-
mortgage amount is the tax that the mortgage company owes, not the homeowner.
Can you see my screen? Can you
Yeah.
can you see? Can you read what that says? Can you read this case right here?
I will, but the last of it may be cut off, we'll try. The donor may be deemed to have paid the tax by ordering the donee to pay it to the
IRS.
IRS.
That's Sachs versus Commissioner. This is an IRS decision.
And that was 88 DC 769 778 1987.
Okay,
Affirm.
you can send a letter to the mortgagor, to the mortgagee, ordering them to pay the tax. Is that what that says?
Okay. By ordering the donee to pay it to the IRS, okay, which was this case, IRS of Sachs versus Commissioner.
Yes, 88. That's tax court. This is a tax court decision.
Okay,
I have all these cases. I'm going to give them to you.
okay, so those will be the things that will be uploaded to me, and they will be provided on the file transfers with the webinars and the transcripts.
So if you read these, then you'll understand how they're ruling on this stuff. You're not claiming this stuff. You're abandoning all this.
Okay,
She took her shoes off. Her skirt looks hella short.
Says a cash basis. Can you read the rest of this?
a cash basis taxpayer recognizes no income until the payment is made. Estate versus Commissioner, 685 Fed Second, 1160, 1162, 9th Circuit, 1982.
This is a California decision.
Okay. Dietrich's result is derived from a part sale, part gift analysis. Although that analysis was not briefed to the court by the service. Dual, D-U-H-L, and Qual, K-W-A-L-L, an analysis of Dietrich. 3, I can't read the rest of that.
It says Taxon, September 1982 at 1:30.
Okay,
Number 5 says Internal Revenue Code, Section 1015 D1A and Section 1015 D6, parentheses, small d, small 6. 1015 parentheses D, small d, and parentheses 6.
okay.
And why aren't people teaching this stuff in the Patriot community?
I have no clue. I guess it just took you to point it out so that we could go down the right trail instead of a rabbit trail. Let's take a couple more questions. How does this apply to state taxes dealing with the FTB?
The federal, the franchise tax board taxes are predicated on the federal.
Okay,
That's how it applies. You can pay, I don't care how much the tax is. I can take you up and we're going to go into it. We won't have time tonight, but I'm going to go on the FTB website. you can use an IOU to pay your taxes.
Okay, where does,
It says that on their website.
okay, where does it state that, where does it state that W-2 and W-4 are classified gift taxes?
It says that in the 6209 decoding manual.
Do you have filled in forms for examples?
We can do some.
Okay, maybe you and I need to do that privately so that we can upload examples. As
Yes.
examples only?
We can do. I can do that. I can do some examples.
Okay, here, we do put the exemption on line 1. It was an error in statements. That was back on the other thing that we were putting on the 709. How about subchapter S corporations?
That's an estate tax. Those are corporate taxes. They still owe the tax.
Okay, do you deduct the except for values that you file from that
Yes.
2.5 million?
I've got somebody that went down there and they told them that they've got them on a pallet. They've got millions of these. They haven't even gone through them yet. That's why you haven't received the credit for it. They've got millions of these sitting on a pallet that they haven't got to because they don't have the staff to go through. Everybody's doing it. The system is overburdened.
Okay. Do we get credit? Not even gonna enter these nonsensical questions that come across here. If you don't get your question answered, it was nonsensical. Okay, we have a question here. People want to know how they can obtain your 3,000 page DVD where the IRS manual does its specify red ink. And your 197 page doc that you mentioned.
Oh,
Are you talking about the decoding manual?
The decoding manual, and you have a DVD. People want to know how they can get that.
I have a 953 page treatise.
Okay,
It's 953 pages long.
okay, so,
It's $200 it's on a DVD.
okay, it's on a DVD, so that's probably what this person was asking for, a 3,000 page DVD. Anyway, Gene said $200. If you people want these, you forward the payments to Gene and we'll see that you get it downloaded. Will the net tax letter also be available? Gene said yes.
All this stuff, I'll make all this stuff available. This is how you learn, by getting, okay, now I'm going to go over this, why your loan was in default at closing. This proves it. This is an IRS document.
Okay, section 856, definition of real estate investment trust. A, in general, for purposes of this title, the term real estate investment trust means a corporation, trust, or association, which is number 1, managed by one or more trustees or directors, 2, the beneficial ownership of which is evidenced by transferable shares or by transferable certificates of beneficial interest. 3, which, but for the provisions of this part, would be
All right. So, does everybody understand what he was talking about? I was gonna play a small little snippet. How he was saying it was default at closing. Loan was in default at closing, which is true. So he sort of kind of just went through he went through a lot to show you how it was the loan was in default at closing. Everybody understand what he was talking about? Everybody understand what he was talking about?
taxable as a domestic corporation.
Can't play the rest.
4, which is neither a financial institution referred to in section 582C2, nor B, an insurance company to which subchapter L applies.
You see, page
Slide,
2.
just a minute. I got one thing right, and it's right in the middle of it, darn it. Number 5, the beneficial ownership, something.
Can you see the screen now?
Yeah, you've got it all way up top. I got this control panel right in the middle. So keep going down. Keep going down. Okay. Keep going down. Keep going down. Okay, the beneficial ownership. You clicked it off. Back up a little bit. Go up some more. The top of page 2. On the beneficial ownership. There it is, number 5, the beneficial ownership of which is held by 100 or more persons. Number 6, subject to the provision of subsection K, which is not closely held as determined under subsection H, and 7, which meets the requirements of subsection C. B, determination of status. The conditions described in paragraphs 1 to 4, inclusive of subsection A, must be met during the entire taxable year, and the condition described in paragraph 5 must exist during at least 335 days of the taxable year of 12 months, or during the proportionate part of the taxable year of less than 12. My goodness, would you please put it in kindergarten language?
Okay, that says that this is what you have to qualify to have a real estate investment trust. There must be 100 or more persons. You have a beneficial ownership in that because you provided the funds. But
Okay.
you're not claiming any of it.
Okay.
Well, if you own the funds, why aren't you claiming them?
I guess because we need to learn how to claim them.
Well, this is why I'm the only one that's teaching this. Okay, now what does this say?
Limitations. A corporation, trust, association shall not be considered a real estate investment trust for any taxable year unless it files with its return for the taxable year an election to be a real estate investment trust, or has made such election for a previous taxable year, and such election has not been terminated or revoked under subsection G. Number 2, at least 95%, 90% for taxable years beginning before January 1, 1980, of its gross income, excluding gross income from prohibited transactions, is derived from A, dividends. Gotta go down a little bit.
Let me move this down. Can you see that?
Interest, dividends, interest, rents from real property. Now you gotta go up to the top of page 4. Pull it down. Or D, gain from the sale or other disposition of stock, securities, and real property, including interest in real property and interest in mortgages on real property, which is not property described in section 1221A1. E, abatements and refunds of taxes on real property. F, income and gain derived from foreclosure properties defined in subsection E. G, amounts other than amounts the determination of which depends in whole or in part on the income or profits of any person received or accrued as consideration for, move it down, entering into agreements, small I, to make loans secured by mortgages on real property or on interest in real property, or II, to purchase or lease real property, including interest in real property and interest in mortgages on real property. Move it down a little bit. H, gain from the sale or other disposition of a real estate asset, which is not a prohibited transaction solely by reason of section 857 B6 and 1 and L and I, big I, mineral royalty income earned in the first taxable year beginning after the date of the enactment of the subparagraph from real property owned by a timber real estate investment trust and held or once held in connection with the trade or business of producing timber by such real estate investment trust. 3, at least 75% of its gross income, excluding gross income from prohibited transactions, is derived from, it's got to go up to the top of the next page over there. Move it up again. We skipped a page. You got to get to page 6. From A, rents from real property. B, interest on obligations secured by mortgages on real property or on interest in real property. C, gain from the sale or other disposition of real property, including interest in real property and interest in mortgages on real property, which is not property described in section 1221A1. I read that. Oh, you got to go down one page. I already read that once. Wondered why it was the same. Go down to page 7.
Well, there's 7 right here. Here's 7 over here.
Okay, abatements. B, abatements and refunds of taxes on real property. Income and gain from foreclosure properties defined in subsection A. We read that. Go down to the bottom. Go down to the bottom of that a little bit.
Is everybody following?
Yep. Yes.
Okay, so I'm gonna stop it there. I'll stop right there. So basically, Gene was showing you, in essence, on how they're doing mortgages. This is nationwide. They're doing this pretty much nationwide. So any type of mortgages, type of loans, car loans, things of that nature. They're pretty much doing this all across the board. Everybody understand that?
Yes.
So in essence, you got to understand the relationship between um you know what they're doing in that back office. So through promissory notes, he mentioned that I pulled a couple things from that, and he basically, in essence, stated that they're supposed to pay the tax on it, not us. Everybody understand?
Yes.
Yes.
So they don't pay the taxes on them. That's what I mean. Essence, that gets essentially from what I'm understanding. That's what the bill is for. Really, that's their job to pay. They're sending you almost like an invoice for used credit, almost. You know what I'm saying?
And so if we're paying it in turn with like cash or whatever, then that's considered a gift, right?
They're sending you a bill. They're letting you know that they've used your credit. And it's up
Right.
to
I
you.
got that part. So then if I mean, for someone who doesn't know, so then if I'm just every month I'm paying my mortgage payment, then the money that I'm sending in, which it's already been paid through the credit, but I'm sending in money. So then is that what they were
Yeah,
considering the gifts?
yeah, because it's already been paid. So you're just continuing to pay it, but that's what they want. Yep, sounds about right. So it's not like you're gonna understand it like in it's not like you're gonna understand it in like a month and then start getting results out of it. Something you gotta really um be dedicated towards and practice at.
That was a lot. I was trying to like catch all the definitions and kind of write them down so I could go back over them as you were playing the video so that I can restudy this. But I think I got the basis of it. Basically, we are not supposed to be paying that. That's on them, but we have been. So that part I gathered. I just was trying to get the definition so I could really understand it.
Yeah, imagine how people feel if they're sitting down like for like 3-4 hours every day trying to understand this. People are actually trying to help people out. Um, it's like a job, you know what I'm saying? When you're trying to figure this out. And you try to help other people, it's like really a job. because it's essentially like, that's just a small snippet of what I mean. It's not really hard in that sense. It's like, it's dependent upon your comprehension and what you wanna get out of it. It all depends. If you just throw it to the side and never come back and look at it, it's gonna be hard because this stuff piles up and it's condensed. So you got to work at it, have understanding. It's not going to come in like right off the bat. I mean, for some, very few people will, but takes time. But if you don't study it, it's not gonna do itself. You understand what I'm saying?
Yep.
Yes.
So he's pretty much telling you how to handle mortgages in general. I don't have anything else to say. I yield. The video pretty much is self-explanatory.
I appreciate the video. I'm going to watch it a couple more times, make sure I grasp it. But yeah, it's a lot of information to cover.
There's videos out on this. There's a bunch of them that he did. He's still alive as far as I know. But I'm gonna let you guys go. Peace and love, and you guys have a good one. If you guys have questions or something, just reach out through email. I'll try to answer them.
Peace and love.
Yep. Have a good one.
Thank you. Good night.